Iron Financial. This is where we help you forge a stronger portfolio and cut right through all that market weakness. So, Apple, they just dropped an absolute monster of an earnings report. I mean, the numbers, on the surface, they look completely indestructible. But are they? Today we are digging in and asking the big one, the $42 billion question. Is Apple a true financial fortress, a solid-as-rock foundation for your portfolio? Or is it just a beautiful facade with some really dangerous cracks starting to show just beneath the surface? We're going to break it all down for you.
Okay, let's get into it. First things first, we have to set the stage. What's the big picture here? Well, the market environment, it's strong. I mean, really strong. You've got Goldman Sachs out there calling for a bull market to run all the way into 2026. They're seeing healthy growth. They're seeing a Fed that's finally starting to ease up. That's a tailwind for pretty much everyone. But let's be honest, while a rising tide might lift all boats, some of those boats are absolute battleships. And there it is. That's the battleship. That's the headline number that's got everybody talking. Apple's Q1 2026 revenue, $143.8 billion. Think about that. In a single quarter. Just let that number sink in for a second. This wasn't just a simple beat on Wall Street expectations. No. This was a complete and total demolition of those expectations. Guidance was somewhere in the high 130s. They just blew right past it. A number like this, it just screams power. It screams dominance. It screams flawless execution.
Whoa, hold on a minute. You're right. That is a massive, massive number. And on the surface, yeah, it looks like an impenetrable fortress. But here at Iron Financial, we don't just stand back and admire the view from the outside. No, we grab our sledgehammers and we stress test the foundation. So here's how we're going to do it today. First, we're going to give the bull case its due. We'll examine what we're calling Apple's fortress of profit. Then we'll take a look inside the engine room to see what's really driving this thing. But then, and listen, this is absolutely crucial, we're going to go looking for the cracks in the armor. After that, we're going to tune in and listen to the whispers from the inside. And only then, after all of that, will we give you the final verdict.
All right, let's kick this off with the bull case, the fortress. And honestly, when you look at these headline numbers, it is incredibly difficult to argue with the narrative of pure, unadulterated strength. We are talking about a company that is operating at a scale that is, well, it's almost impossible to comprehend. It's a financial juggernaut, plain and simple. And this latest earnings report just put that reality on full display for the entire world to see. Let's really drill down into the core financials. Just take a look at this table. You've got revenue, the top line, at $143.8 billion. That's up a staggering 15.7% from this time last year. Then you've got net income, right? The bottom line. What actually goes in the bank? $42.1 billion. Pure profit. That's up 15.9%. And then there's earnings per share, Wall Street's favorite metric to obsess over, up a massive 18.3%. But the number that really truly jumps out at me here is the gross margin. Now that's the percentage of revenue left over after you account for the cost of actually making the product. At 48.2%, they are not just maintaining their profitability, they are actively increasing it, even in a world with rising costs. That, my friends, is a sign of incredible, almost unheard of pricing power. Every single key metric you see here is a record. This is exactly what a financial fortress looks like on paper.
So, okay, the fortress walls are high, they are thick, they look unbreakable. But what's powering it all? What's happening inside those walls? Let's take a walk down into the engine room and see exactly which components are doing the real heavy lifting to generate these kinds of world-beating numbers. Because a machine this enormous has a lot of moving parts. We need to see which ones are firing on all cylinders and, maybe more importantly, which ones might be sputtering a little bit. This slide really says it all, doesn't it? Just look at that jump. We're looking at a leap from $124.3 billion to $143.8 billion. Do the math. That's a nearly $20 billion increase in a single quarter, year over year. This is the biggest revenue growth spurt they've had since back in December of 2021. So the engine isn't just running, it's accelerating, and it's accelerating hard.
Now, let's break that engine down into its core components. The iPhone, well, it's the heart of the whole operation, isn't it? It's bringing in a massive $85.3 billion. And to put that into perspective for you, that one single product line, the iPhone, generates more revenue than most Fortune 500 companies do in their entirety. But look over here at services. At $30 billion, it's now officially bigger than the Mac, the iPad, and the wearables divisions combined. This is that flywheel effect in action. It's a pretty simple concept, right? The more iPhones they sell, the stickier and more valuable that ecosystem becomes. which then allows them to sell more and more high-margin services like Apple Music, iCloud, and all those App Store commissions. It is a beautiful, self-perpetuating cash machine. And this table here, this tells an even more compelling story when you dig in. Just look at the iPhone. It's up 23.4% year over year. Folks, that's not just growth, that's an explosion. And it's driven by what Apple themselves are calling unprecedented demand. And then you've got services, the second engine, just humming along at nearly 14%. That's that beautiful recurring revenue that investors absolutely love to see. Now look, it's not all sunshine and roses. Wearables are down slightly and Mac sales are down almost 7%. But let's be real, when your main engine is firing like this, you can afford a few misfires in the other departments. And hey, you don't just have to take my word for it. Tim Cook himself, right there on the earnings call, called it the best ever quarter for the iPhone. The key phrases he used were unprecedented demand and all-time records across every geographic segment. This isn't just some analyst spin. This is the CEO on the record confirming the absolute, total global dominance of his core product. From the bull's perspective, the case seems closed. This is a fortress with an engine room that is running at full throttle. Okay, I'll give you that. That was a very compelling victory lap. The numbers are undeniably, almost unbelievably impressive. The fortress is massive, the engine is powerful. But here's the thing. No structure is perfect. No armor is completely impenetrable. And you know what they say? The bigger they are, the more catastrophic the fall. So I think it's time we stop admiring the architecture and start looking for the stress fractures. It's time to check for cracks in the armor. You know, the bull case, the story that Apple's PR team wants you to believe, is one of a completely flawless operation. They present this narrative of total and complete invincibility. But at Iron Financial, we have to ask the hard questions. A fortress this strong, it can't possibly have weaknesses, can it? Because if you look a little closer, if you really look past those stunning, blinding headline numbers, some very, very concerning patterns begin to emerge. And here it is, the first crack in the armor. You see, not everything in the Apple empire is growing. Just look at this slide. On the left, you've got the growth engines, the iPhone and services, and they are carrying the entire weight of the company on their shoulders. But on the right, you've got the stalling parts. Mac sales are down almost 7%. Wearables, which was supposed to be a key part of their future, are actually shrinking. Apple's growth is becoming dangerously concentrated. The entire fortress is resting on just two pillars. And from an engineering perspective, that is a huge structural risk. Now, this is the slide that should really get your attention. Where is all of this explosive growth actually coming from? Let's look at the numbers. The Americas, right, their home turf, it grew at a respectable 11%. Europe, 12%. Okay, but look at Greater China, up an astronomical 37.88%. That is a staggering number, but it's also a massive red flag. Apple isn't just selling a lot in China. Its growth, its entire growth story is becoming dangerously dependent on China. And in a world of increasing tariffs, trade wars, and just intense geopolitical friction, concentrating your growth in one highly volatile region is a massive, massive gamble. This isn't a strength, it's a significant potential vulnerability. And then there's the elephant in the room, artificial intelligence. I mean, while competitors like Microsoft and Google are out there spending tens of billions of dollars building their own foundational AI models from the ground up, what's Apple's big strategy? A partnership with Google to integrate Gemini into Siri? This quote from a retail investor on Reddit, I think it perfectly sums up the market sentiment. The perception is that Apple, the great innovator, was caught completely flat-footed on the biggest technological shift of our time. They are, in effect, outsourcing their brain to a direct competitor. That is not a sign of strength. That is an admission of a major strategic gap in their armor. So let's recap. We have product concentration risk. We have serious geopolitical risk. And we have a gaping strategic gap in what is arguably the most important technology of the next decade. But you know, the most damning piece of evidence that something might be amiss, it doesn't come from the balance sheet or some Reddit forum. No, it comes from the actions of the people who know the company best. It's time to ignore what they're saying and watch what they're doing. It's time to listen to the whispers from the inside. Just look at this slide. This is data straight from Quiver Quantitative, and it tracks insider trades over the last 6 months. And it is stunning. Tim Cook, the CEO, 0 shares purchased, over $33 million sold. Deirdre O'Brien, Senior VP, 0 purchased, nearly $19 million sold. Catherine Adams, the General Counsel, 0 purchased, over $12 million sold. Even the CFO, Kevin Parekh, 0 shares purchased, over $1 million sold. The pattern here, it's undeniable. The people who know the most about where this company is headed are all cashing out. They are all selling. Let's just make this perfectly undeniably clear. 0. Over the last 6 months, there have been 17 open market trades by Apple insiders, and not a single one, not one of them was a purchase. 100% of the insider activity has been selling, so you have to ask yourself a very simple question. If the entire leadership team truly believed that the stock was undervalued or on the verge of another massive run-up, would every single one of them be selling and not a single one be buying? Their actions are speaking volumes, and they're speaking far louder than any words on an earnings call. And it's not just the insiders either. Let's look at the whales, the big institutional money, the ones who move markets. Kingstone Capital, they dumped their entire position. Over $52 billion worth, gone. PKS Advisory Services, they sold 99.9% of their stake, nearly $15 billion. But the real headline here is Berkshire Hathaway. Warren Buffett's firm, one of Apple's largest and most famous champions, trimmed its position by almost 15%, selling over $10.6 billion worth of stock. When the insiders are all selling and Warren Buffett is trimming, you absolutely have to ask yourself what they see that the rest of the market doesn't. And yeah, sure, Vanguard added a bit to their position, but the clear, undeniable trend from major, long-term holders is one of reducing exposure. That's a powerful, powerful signal. All right, the skeptic has laid out a powerful and frankly a very troubling counter-argument. That data on the insider selling is just impossible to ignore, and the growing reliance on China for all of their growth is a legitimate risk factor that you just can't dismiss. So how do we reconcile these two completely different narratives? On one hand, you have the impenetrable fortress, and on the other, you have this beautiful structure with hidden, dangerous cracks. Let's put it all on the table and deliver the final verdict. So here it is, side by side, the two apples. The bull case is what we call the fortress, record-breaking $143.8 billion in revenue and $42.1 billion in pure profit. Absolute iPhone dominance with over 23% sales growth. The services empire is still growing at nearly 14%, and it's all built on this massive 2.5 billion active device ecosystem that just locks customers in for life. I mean, the numbers are, frankly, they're beautiful. But then you have the bear case, the cracks. 100% insider selling from the CEO all the way down. Major institutional holders like Berkshire Hathaway trimming their positions. A lagging outsourced AI strategy and a really dangerous geopolitical risk with 38% growth coming from Greater China. It's a story of incredible present performance versus very significant and growing future risks. So what's the final Iron Financial verdict? Well, we see Apple as a company that is truly at a crossroads. The numbers today are absolutely incredible. It is a money-making machine unlike any other in history. But the smartest money in the room is selling, and you have to ask why. It's because they see the risks on the horizon, they see the geopolitical exposure to China, they see the gap in their AI strategy. Our verdict is this: Apple is a fortress, yes, but it's a fortress that has been built on a fault line. The question for you, as an investor, is not about last quarter's earnings. The real question is whether you believe that foundation can withstand the tremors that are sure to come. Is this a foundational asset for your portfolio, or is it a beautiful structure that's just starting to show the first signs of long-term stress and fatigue? That is the $42 billion question.